All right, folks, it's time to raise the red flag here and highlight a seemingly growing problem. Small-scale producers, particularly in silver, have a costing problem, at least during the latest set of third quarter results that we've seen. We saw it with Aya Gold and Silver, Guanajuato Silver, Mako Mining, and now Santacruz Silver, whom is the latest small-scale producer to publish their third quarter financial results. Shareholders appear to be lenient on the matter, but that's besides the point. Guys, we are talking silver, we're talking Q3 earnings, it is Q3 earnings season, and we're talking Santacruz Silver. Let's dive in. All right, let's start with the high level. Santacruz Silver in the third quarter recorded revenue of $78 million, an 11% improvement on a sequential basis from $70 million in the second quarter, and a 21% improvement from $64 million in the third quarter of 2023. The revenue increase has been attributed to both the Bolivia operating mines, which consists of 4 separate operations, as well as the Zimapan mine in Mexico, which saw improvements in the price of silver sold on a year-over-year basis, along with an increase in the volume of silver equivalent ounces sold. Gross profit declined on a sequential basis, falling from $15.7 million to $14.8 million. However, it was still a 100% improvement from the $7.4 million recorded in Q3 of 2023. Net income improved to $4.1 million, or 1 cent per share in the third quarter, versus $1.5 million, or 0 cents per share in the second quarter, and a net loss of $4.3 million last year. Adjusted EBITDA, however, declined by 6% sequentially, falling to $15.8 million, versus $16.9 million in the second quarter and $4.6 million in the year-ago period. Cash and cash equivalents as of the quarter end totaled $18.2 million versus $7.3 million as of the end of the second quarter, while working capital improved from $15 million to $24 million on a sequential basis, thanks in part to third quarter operating cash flows of $21 million. All right, let's get into some details here. Santacruz Silver in the third quarter saw 4.6 million ounces of silver equivalent production, which represents a 4% decline on a quarter-over-quarter basis and a year-over-year decline of 1%. Production can be broken down as 1.7 million silver ounces, 23,000 tons of zinc, 3,000 tons of lead, and 270 tons of copper. Compared to the second quarter, silver and lead production improved by 2% and 4% respectively, while zinc production was down by 8% and copper production was down by 5%, leading to overall silver equivalent production being slightly down. Zinc in production is said to have declined at the Bolivar and Caballo Blanco group operations, which was partially offset from improved production at both San Lucas and Zimapan. Silver equivalent sold during the quarter, meanwhile, totaled 3.6 million ounces, a 6% improvement from the 3.4 million ounces in the second quarter, but a 6% decline from the 3.8 million ounces in the third quarter of 2023. The big problem here for Santacruz Silver is the fact that the cost of production continues to climb. Cash cost per silver equivalent ounce sold came in at $22.38 an ounce, a 3% increase on both a sequential and year-over-year basis. All-in sustaining costs of production jumped to $27.40 an ounce, a 10% increase from $24.91 in the second quarter, and a 5% increase on a year-over-year basis. No explanation was provided for this increase by the company. The average realized price per ounce of silver equivalent, meanwhile, fell to $29.86 an ounce, versus $30.40 an ounce in Q2. This figure was still, however, an 18% improvement from the $25.31 in the third quarter of 2023. The rise in costing also comes despite improvements in milling facilities, particularly at the Don Diego mill, part of the Bolivia mine operations, where silver recovery from the lead concentrate was improved. While Santacruz may be small in terms of market cap, with a valuation of around $100 million, they appear to have a healthy retail following, which might be partially attributable to their strong relationship with Glencore, whom they purchased the Bolivian mining assets from. A sticking point for several investors, as it is with us, is the ongoing rise in AISC. On this front, the CEO.ca boards have heavily discussed the matter, with Acacio wanting an explanation on the 10% increase, while Iris says they are way too high and that there are no instructions for reducing AISC costs. On the flip side, Austro Chris is unbothered by the rising costs due to the cash cost staying basically flat, while Felipe seems to think we're all stupid for being concerned about all-in sustaining costs at all. Hungry Tiger is more focused on the positive swing in working capital. Over on Twitter, Mark IKN simply posted a meme about Glencore riding Santacruz, which some say is a well-worn narrative that doesn't really apply anymore. And in fairness to that argument, following the end of the third quarter, Santacruz's relationship with Glencore did in fact change, with Santacruz no longer owing any royalty or profits from sales at its Bolivian operations to the mining giant. Santacruz, however, failed to indicate how this would impact fourth quarter and future results in a material way. All right, so let's wrap it up. Santacruz overall had a decent quarter, which yes can be attributed to positive momentum in the price of silver, but a rising tide lifts all boats. The challenge here clearly is that they need to keep costing down, and being transparent on these costing increases would also likely go a long way for investors. But this isn't a problem that is exclusive to Santacruz by any stretch of the imagination. Costs are rising across the board for all producers as inflation continues to roar. Regulations are getting more overbearing, and employees are going to ask for higher wages. The question for investors is whether the rise in the price of the underlying commodity can continue to outpace these cost pressures. All right, everybody, we are almost done Q3 earnings season. We appreciate all the feedback we're getting in our comments section. It appears that people really like these earnings videos, and we hope that we're giving some color to you guys who are just looking for a little bit more narrative on your junior mining stocks. And we're going to continue to bring that coverage for you. If there's names you want us to cover, let us know in the comments section. Also, if you're long Santacruz Silver and you have thoughts, please let us know what you think. If you want us to keep covering the story, let us know. Also, if you enjoyed this video, please smash that like button, subscribe, and ring that notification bell. All right, everybody, thank you for watching.